Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals.
This webinar was previously recorded and converted to a listening format. Now, please enjoy this timely and valuable market information from expert commercial real estate investor James Kandasamy and special guests.
For your real estate business. So we start off, what is the infinite banking concept? What it is and what it is not, how it works, and then how to get started. It's based upon a book of Becoming Your Own Banker by R. Nelson Nash. Now, Nelson came out of the forestry industry and learned about long-term growth and planning. Also was a pretty big insurance producer and investor, and learning in the 70s when he had a very high lending rates going on because of inflation and what was going on with the economy at that time. It was very hard to hold assets on short-term loans that were ever increasing. And so Nelson had come up knowing and remembering that he could borrow against his life insurance policy, where the rates in there are contractually guaranteed. And so after learning that, he discovered or kind of put together this process for becoming your own banker and said, well, you know, you can apply it for your investing, but you can apply it for everything that you do in your life. And so that's where he came up with Becoming Your Own Banker, and then has since brought out or written a couple other books, from Building Your Warehouse of Wealth, A Case for IBC, and a couple others. So what is infinite banking? Well, it's a closed loop financial system. So if you think of how the weather works, when the sun hits down on a water stream or river or creek or anything like that, it causes evaporation, which then goes up into clouds and reforms and then produces more rain. That rain then falls on into the rivers and runs down back in again. It's just a closed loop system. It also uses the power of unstoppable compounding. This is really something that I really want to impress upon you. If you look at this grid here, this is a penny that is doubling every single day. Now, there's not an investment out there that's like this, but I really want to use this to show you how compounding works, right? So you can see it doubling every day from 1 cent all the way up to $5.3 million by day 30. So if you apply this to this bar graph right here, you can see that in this interval is about every 3 days. So there are 10 3-day cycles here, intervals. You can see in the first 4 to 5 intervals, there's hardly any movement. And then all of a sudden in the 6th through 10th interval, it just goes up significantly, right? But what if you wanted access to that money? Let's say in day 23, you had a really good deal come along that you wanted to invest in. Well, if this were doing this inside of, say, your bank account, you took out that $41,000, you would completely stop the compounding cycle. So 7 days later, you would not have access to $5.3 million. And so the infinite banking concept allows you to be able to keep this compounding, yet access the capital via a loan against the system, as opposed to a withdrawal from the system. So that's the big difference. It is powered by a specially designed whole life insurance contract that offers high early guaranteed cash value buildup, not based upon a high death benefit. Has tax-free growth. So when you receive dividends, you do not pay tax on that. And it's tax-free participating dividends, which is a return of premium, and that is compounding annually. You can borrow against the policy at any time, right? There's no qualifications other than just having the available cash value in your policy. There's no credit check, there's no payback required, even though you do need to service at least your interest in the policy. So the interest that you charge annually, you need to be able to service that with your cash flow. And then the other significant part is that all these policies are issued by a mutually owned whole life insurance. So there's two types of insurance companies: a stock insurance company and a mutually owned insurance company. Stock company is owned by outside investors, right? So a return needs to go to those investors. So that is leaving the system when you have a stock company. A mutually owned company is owned by the policyholders. So everything, just like that weather system that we saw earlier, everything is within that system. It keeps regenerating within your own system. There we go. Oh. All right, you can think of it like a water wheel. Let's say that this water stream is your free flow income, right? You need to have income in order to power these. So consider the water stream your income. That goes into it's turning the water wheel. The water wheel is capturing your income and pulling it up into a little reservoir and then pouring it down into a field that is providing water for a harvest that will then go on to grow and be sold eventually. It's all a self-contained system at providing income and equity. What can you use IBC for? What you can use it for a lot of things. It's not just for real estate investing, right? And you can say buy equipment for your business. You can finance the real estate or tenant improvements. Say if you had like a restaurant. It can also provide short-term capital needs, like when you have a loss of rent. You can fund a group owner or employee pension system. So let's say that you have a vertically integrated management system for your investing business. You can have your employees participate in a group system, and then that will then provide capital to be able to invest back into your investments. And then you can use it for, say, college, car purchases, weddings, household expansions or major remodels. And then also it has retirement planning. You can do long-term care from it. And we have different riders that we can add to it to help you with that. You get the benefits of both worlds, right? So in investment real estate, you have ownership, which is appreciation. You have equity buildup, positive cash flow, and favorable tax consequences like depreciation. In infinite banking, you have appreciation of your policies. You have equity, which is the cash value of your death benefit. You can leverage other people's money. So when you borrow money, you borrow it from the insurance company with your policy acting as a lien holder. That's it. And then you have cash flow in the form of your dividends. And then that also offers an inflation hedge because the rates on this are much more significant versus just say idle cash sitting in your bank, which, by the way, you'd pay taxes on that interest that you earn, and as opposed to you don't do that here. So it'll help you be in more control of your money, help you expand your real estate, provide a replacement income for your family if something happens to you, and it also provides an additional source of money in your retirement. Insurance is not an investment because it is guaranteed, and it's guaranteed by insurance companies that go back to the mid 1800s that predate our tax system. And so it can provide you with coverage and security and safety and protection and confidence. Sources that you can start your bank with are cash and your cash flow. You can borrow from your 401k or take a distribution. And there's also distributions that if you're 59 and a half or older from your IRAs, and you can do that. It can also help you pay for those taxes by providing you that source of capital. My partner and I, we use the living balance sheet so we can work with you to help you set up your plan. And it is a great integrated financial representation of your life. Your next steps are to follow up with me, and then we can sit down one-on-one and take a look at what you have and what you want to do and start building your bank from there.